Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the week before Christmas. Before I do the usual and switch over to my screen share and walk you through a lot of the charts and the data that I guess most of you tune in for, I'm being asked a lot at the moment about Santa Claus rallies. Can we expect a move higher going into the end of the year? Again, I have some charts that I want to kind of walk through. It's of course been very challenging on many fronts for the market over the last few weeks. For those of you that don't know, I have been on vacation over in the US, enjoying a bit of that southern hospitality around the Tennessee, Georgia area, a lovely part of the world. But whilst I was on vacation, of course, the market started to present some challenges. So I actually had to do quite a lot of work remotely over the last few weeks, and I want to share quite a lot of the charts that I've been sharing with our clients over the last few weeks, because I think it's very important, because it's very easy to provide bullish charts in a bullish environment, but it's when you have these challenges with the market and where risk management really comes in. I think that's probably the most important time to kind of put my work out to the world. So I hope you get some value from this. And if you do, the only thing I ask, as always, is you give the video a little bit of a like, because it all helps to get the word out there. And yeah, let's dive into the charts and let's see what the market's telling us. Now, before I get into the charts, as always, please pause the video, make sure you're comfortable with that. Basically just says there's not any investment advice, and to not be silly and to do your own due diligence. To give myself maybe a little bit of credibility, I'm working my way towards my CMT. Technical analysis is something that I'm widely known for in professional circles. And like I said before, I hope you get a lot of value from this. Something that I understand very well is, in this game, it's very much about what have you done for me lately. Just a few calls that I've recently made. The small caps breaking down, massive headache. I made a call coming into September that seasonality was a problem. I recently made a bottom call in the NASDAQ when everybody was losing their minds predicting crashes, and small cap growth as well. I'm going to be presenting this chart today, so if you get some value from it, feel free to go and check out our website, how I predicted the crash of 2020. No hindsight indicators are used in the making of my work. And like I said before, just please give the video a like, as it all helps with the YouTube algorithm, and it's the cost of entry. So let's dive into the charts now. I'm going to spend around 5 minutes walking you through the broader market, what we can potentially look to expect, and maybe answering some of the questions as to whether or not we've reached a bottom in a lot of individual names and areas of the market. Now, this is the seasonality chart. Now, believe it or not, December we're actually higher at the moment. We've actually moved off the lows. So I'm actually looking at this as a little bit of a positive. I think what we're seeing at the moment is, of course, that there's rotations everywhere. It seems like there's no real consistency at the moment. But this is my chart for the Russell 2000 and of course the small caps. Now, if you watched my analysis last month that I put out to social media, essentially what I was saying is, with failed moves, we can get fast moves going in the opposite direction. Now, this is ultimately what has played out. Now, we are in a massive sideways range at the moment, and of course the small caps are trading at the lower end of that range. So I think we are potentially approaching a tradable bottom in the Russell 2000 small caps. We've got support with a bullish divergence. So whilst bullish divergence in of itself doesn't guarantee that we've reached the bottom, It's one of the data sets that I like to look at, and as we're at the bottom of the range, we've got very clear support, supported by a bullish divergence. So I'm quite comfortable at the moment with maybe testing the waters. Now, as always, we have to understand where that bullish thesis starts to fall apart. And if we start to break down below the sideways range, then that's a big problem. In the same way that we put in a failed breakout here with the small caps last month, if we take another leg lower, then that's going to be very bad news. Now, I posted this chart to social media over the last couple of days, again highlighting Russell 2000 and the growth names. Now, the reason why I like to use the Russell 2000 is it's a good gauge of market sentiment. You know, are we in a risk-on environment? Are we on a risk-off environment? What we've seen over the last few weeks has been a shift towards quality names. I think anything that has, you know, been trading at, you know, insanely high valuations, you know, massively high PEs, they've all been taken out to the woodshed and chopped to pieces. Many of those names are down 50-60%. I think one of my members shared a chart this week of STNE, which is, I think, down 90% off its highs. And that's something that we've seen with the Russell 2000 names. So although the Russell 2000 is maybe down, you know, 8-9%, whatever it is, that doesn't tell you what's actually going on, because a lot of those names and the charts have been absolutely cut in half. Now, there are a couple of headaches that I have, and I think for those of you that have maybe followed me, you know, over the last couple of years, and certainly coming in to October on the back of a pretty choppy September, when everybody was predicting crashes and massive corrections, I was highlighting the breakout in the consumer discretionary relative to staples chart, because that's a risk-on chart for me. If we've got an environment where consumer spending is outperforming the staples, then that's a risk-on environment. And ultimately that's what played out, because a lot of the tech names, the Nvidias, etc., a lot of those names ripped. Now, to the other end, if we're in an environment where we've got consumer staples, which is a defensive sector, outperforming discretionary, which is what this decline tells us, this is a problem for me. So I'm hoping that this is going to resolve itself over the next few days and we move higher. But it's one of those data sets that I'm using at the moment, and it's telling me at the moment not to get overly aggressive in either direction. That's really what the chart is saying. When we look at technology and how technology has performed over the last 14-15 months, something that I've been walking our clients through is, if you are heavily invested in technology, if maybe you're just a growth tech only investor and you don't really look at other areas of the market, there's obviously an acceptance that you have to deal with massive drawdowns. Now, when I say massive, of course, we're not talking 30-40% crashes, but we are looking at quite a number of corrective phases, and ultimately these offer opportunity. Tech isn't going anywhere, but something that I am aware of is the failed breakout, and if we start to break below the previous highs dating back to September, when we had an 8% decline in the triple Qs, again, that's another massive headache. So whilst I of course want this level to hold as support, if it breaks lower, as we've seen already with the small caps, that's a potential problem. So the way that I'm looking in and viewing the technology names at the moment is, if we break lower here, there's likely to be a rotation into something like the small caps going into the end of the year. That's the way that I see the data at the moment. Now, of course, I can change my thesis on 30 seconds notice. The problem with doing these videos for social media once a month is I cannot update everybody on my charts every single day. The charts move, they change, the data changes. But at the moment, this is what the data is kind of telling me at the moment. Now, we've got technology relative to the Dow Jones Industrial Average. Now, this ratio just compares which area of the market is better to own. We've got technology breaking out above its February 2000 highs in this ratio. So this tells me that technology is currently better to own than the Dow Jones Industrial Average. Of course, over the last week, there has been a bit of a shift, and it's the industrial names that are doing reasonably okay at the moment. And over the last few weeks, whilst I've been on vacation, a lot of my work has been geared to those names, and there's many of them that I'm going to be walking you through today, sharing with you, because I think these are areas of the market that could be poised to outperform. Like I said, I'm not a growth tech only investor. I use technical analysis, but I think if you were to sit down and have a beer with me, I'd probably tell you that I'm a technical investor, and that's really how I see the market at the moment. We've got technology breaking out relative to the S&P 500. So whilst tech is undergoing a couple of challenges at the moment, the longer term structure of technology is very much in play. We've got the S&P 500 pulling back to its 50-day simple moving average, but ultimately it is off its lows from earlier in the month. And of course, we've got the Dow Jones Industrial Average, which pulled back to its 50-week simple moving average and has rebounded reasonably well. So that's really my views on the broader market at the moment. It's not as cut and dry as I hoped it would be going into the last couple of weeks of the year, but the Santa Claus rally is something that takes into effect in the last 5 trading days and the first few days of next year. So I'm still hopeful that we'll get that. That should hopefully start, I think, on the 27th. So again, we'll see how it plays out. Now, I'm going to just walk you through, I think I've got around 20 individual names, charts that I want to share with you, just to show you that there are stocks that are doing very well at the moment. And they're not small companies, they're huge market caps. And we'll start off with ABBV. We're obviously in the health tech space, and we are breaking out to new all-time highs. This is a chart that was shared with our clients last week, and it's broken out, and I like it provided it's above 126. Now, if you caught my analysis last month, you'll know that Apple was front and center on a breakout to new all-time highs. Now, when, of course, we've been dealing with the turmoil in some areas of the market, essentially what I have provided to our clients, and of course disclosure, I own Apple, but considered a decent place to park capital in an environment where the market's undergoing some challenges. Now it's pulled back to its 20-day simple moving average, and that's a characteristic of an uptrend. So I'm hoping to see the 20-day simple moving average act as support for the uptrend, and I hope to see the trend continue. CRISPR, again, disclosure, I own CRISPR. I bought it this week on the strength of the 200-week simple moving average acting as support. Again, biotechs have been taken out to the woodshed, and for me, it looks like it's potentially looking to put in a trend reversal. Again, this is a chart that I put out. I actually put this out to social media as well. And I hope to see this move. It moved 8% yesterday, so it's off to a great start. And I don't see anything wrong with, certainly de-risking the position. Low PE ratio, good earnings growth. It's a stock that's very difficult to ignore. We've got CF Industries holding up very, very well. Now, this is a $13 billion market cap. This is not a small company. It's probably a company that you've never heard of, but I like the look of the chart very, very much. Again, we've got Fastenal, member of the triple Qs, distribution services, $35 billion market cap. For me, it's a Fibonacci chart. Now, I'm using Fibonacci extensions dating back to 2008. As we can see, and as the chart can demonstrate, these Fibonacci levels matter to this particular chart. Provided this chart a couple of weeks ago to our members, and it has broken out, and I like it above $60. The theory behind the Fibonacci is it just moves from one level to the next. But of course, where is our thesis wrong? It's wrong if it starts to break down below these levels. My work got a lot of attention over the last couple of months because I made a bearish call on mobile payments, Visas, PayPals, MasterCards, because of the disruption of the Bitcoin Lightning Network and what we're seeing. You can go back and check the last 2 months. And what I'm seeing at the moment with the mobile payments, there are signs that we're potentially bottoming. Again, what am I looking for? I'm looking for support levels with price, and I'm generally looking for a bullish divergence. Now, again, if this starts to resolve lower, then that's going to be a problem for a lot of the payment processing companies that have taken a hit recently. Square Inc, for example, it's very, very similar looking chart. But if this is the bottom, then we can start to look at names like PayPal again. It's obviously been taken out to the woodshed, and if it starts to break back above these Fibonacci levels, specifically with PayPal, I like it above $200. The reason why I don't like it lower than $200 is because I think there's a danger of catching a falling knife, and I just want to have that added confirmation that we start to break higher. Again, a few weeks ago, for those of you that picked up my blog on the payment processing companies, I made a call on Visa, saying that the 50% retracement might act as some kind of support for price. That's ultimately what's happened. It's ripped off its lows. So at the moment, Visa looks like the play to have in the space other than PayPal. Both great companies, but Visa does look like the play there. Now, Lithium Americas has undergone a massive challenge. Now, for those of you that don't know, I provided this chart to our clients on this breakout here at the start of November, and it moved 35% or so, and of course it's pulled back massively. Now, I very much like Lithium Americas, but the problem we have here is we're now at a very key support level for the stock. Now, if it starts to break lower, then it's going to be offering a bigger discount. I don't know if it will break lower, but ultimately, if this level acts as support next week, perhaps Monday, Tuesday, it starts to catch a bid, it might be a tradable bottom in Lithium Americas, but extreme caution if it breaks down below these levels. Nvidia, disclosure, I own plenty of Nvidia. I've got a big headache with this one at the moment. It's pulled back to its 50-day simple moving average. I posted on social media this week that this would be a potential support level for the stock. That ultimately played out. But then, of course, Thursday hit, and that's not a great looking candle there that we've got on Friday. So I'm a little bit cautious with Nvidia. I probably have a decision to make next week whether or not I want to book profits on it or ride it out. I'm not entirely certain what I'll do yet. I'll come up with a game plan probably Sunday evening, but ultimately I think this looks to be a very strong trend line resistance. So if there's a a move higher in Nvidia. I think for new investors, this could be a momentum area where we get a spike in price. Broadcom, again, one of those charts that has held up pretty well throughout the whole market downturn. Again, provided this one to our clients 10 days ago, and it looks like it's a solid looking breakout, and it seems to be holding up very, very well. We've got Meta disclosure. I own plenty of, let's call it Facebook. I don't think I'll ever get used to this Meta. But yeah, like above 356, I have bought the dip on it. Again, great company, not a lot to dislike other than Mark Zuckerberg, who I don't have much time for. We've got Google looking like it's wanting to potentially break out. I think above $3,000 there. Again, not rocket science. I'm just using Fibonacci. The Fibonacci levels matter. Don't know why, they just do. But again, if you're talking about great companies, earnings growth, it's all there for Alphabet. And unlike, you know, something like Amazon, for example, which I'll go over in a second, I had a few people asking me about it. When you compare Google with Amazon, it's very, very clear what chart is better to own. Now, I'm also looking for discounts on great companies. ABNB is one of those names. For those of you, again, I made a call on ABNB at $100, saying it was looking like it was a little bit fatigued, supported by a bearish divergence and a break below the Fibonacci levels. And I've been watching this one for a potential buy. Now, I have not bought it yet. I missed this one, this move on Friday. I wish I was watching it, but I think this pull back to the 200-day simple moving average makes a lot of sense. Again, where is the thesis incorrect? I think it's incorrect if we start to break below these Fibonacci levels and things like the 200-day simple moving average. Airbnb, again, probably not being helped by all the nonsense headlines with things like COVID and so forth. I think we're, of course, looking for a failed breakdown, and with failed moves, we can get fast moves going in the opposite direction. So I think Airbnb makes a lot of sense to just kind of keep an eye on it. Again, great company. Earnings growth, I think we can kind of discard at the moment. I think next year, I think hopefully the economy just starts to fully reopen and we can get an end to the whole COVID thing. I'm sure most of us are probably fatigued at this point with it. AMD, again, great company, pulled back. This was a logical buy point, 50-day simple moving average, Fibonacci level. The problem that I have with the AMD is if it does break lower, then it's probably going to pull back to another logical support level. So I think for me, I potentially look to buy it back. For disclosure, I owned this when it pulled back to $100 and was involved in quite a lot of this trend. It has, of course, pulled back, and I'm looking to buy it again, but it needs to make sense. I'm going to wait and see what happens next week with the semiconductors and whether or not they start to fall away a little bit. I feel like I'll wait and see what happens with Nvidia before I start to go adding more semiconductors. Antero Resources, I've been covering this one for about 18 months now, and I think this is a potential trend line breakout. Again, where's the thesis wrong? Well, it's wrong if it starts to break below $15. Trend line support for Etsy and the 200-day simple moving average. The hope is that, I guess for those of you that like Etsy, are hoping for some kind of rebound from these levels. I think from a technical perspective, it might be a dip that you can buy, but again, if you start to break below this trend line and you break below that 200-day, moving average, then that's a problem, and you're probably looking to dollar cost average at that point or cut your losses. Again, another one of those names that have absolutely ripped higher. I think many of you will have missed this one with Pfizer. Again, I'm very, very sick to death of, you know, the Pfizers, the Modernas, and the ads and everything that goes along with COVID. But it's broken out of a base dating back 20 years. And of course, this was sent out to our clients and members on the 20th of November, and it's done very, very well. It's one of those names that you could see going a lot higher. Quite a low PE ratio, obviously massive earnings growth. I don't know if that will stop anytime soon. So I think Pfizer is making a lot of sense. But something that I've been communicating to our clients is, with something like Pfizer, you have to understand that you're also at the mercy of the headline risk. So, you know, you could quite easily open your trading account or your investing account and you could see that it's gapped down 20% overnight because, you know, a competing company has a better product. So that's something that you have to bear in mind with Pfizer. But technically it's breaking out of a 20-year base, and you know, I can't ignore that. We've got Zscaler pulled back to its 100-day simple moving average. It might well appeal. Looks like it's caught a bid here this week. We'll see what happens. We've got Home Depot pulling back to its 50-day simple moving average. I got asked about this week because I covered it in October. And again, we'll see if that's a logical buy point. We've got Microsoft, again, massive tech name, but we're looking for these levels to hold as support, the 100-day simple moving average, and we're also looking at historical support levels to kick in. We've got Amazon, which has done absolutely nothing for 18 months. I don't see the point in owning it. Yes, it's a great company. I know that that's the response that I get from you know, many of you that hold Amazon. But when I compare Amazon with Google, there's no second guessing. We've got one stock that's going up and another stock that's doing nothing. But that said, it does look like it's forming a bit of a base. We've got Proctor Gamble, again, another one of those names that has held up very, very well. Like I said, I know that these names are boring names. I know that they're not terribly exciting, but unfortunately, I don't set the market conditions. I don't set the stocks that are moving higher. My job is to just identify the ones that are showing the relative strength and where the allocations should be considered. Procter & Gamble, I put this chart out to social media this week just saying it's reasonable now to expect a pullback, and I have a few of our clients that have booked profits on this one. Again, we'll see if the uptrend continues. LPX, again, held up very, very well. I provided this to our clients a couple of weeks ago. Massive earnings growth, very low PE, and I like it above 76. Micron Technology, provided this one on Wednesday in our halftime report to our clients. I like it if it can break out of this trend line. Again, we have quite a few of our clients and members that bought in on this one here, and it's now consolidating, looking for another entry. Berkshire Hathaway, boring name, but it's breaking out. It looks like it's putting in a successful retest. Again, Pepsi, another one that's held up well. Provided this one last week, and breakout pulling back to logical support levels. QDEL, again, very low PE, earnings growth, looks like it's breaking out. And we've got Zoetis, I don't know how to pronounce it, but again, it's a Fibonacci chart for me, and it looks like it's wanting to break out. So before you go any further, go and hit that like button, subscribe, share the work on social media if you feel like it. Like I said, I do this work for nothing. It takes me many hours to prepare, edit, get out there, and it would be very much appreciated. If you are somebody that got some value from it, bit of an announcement to make with our work at the moment. If you go and check out our website, I'll show you what it is that we provide. But with my work, we provide our premium weekend analysis, which is sent out to our clients and members every week. We provide trade ideas, we provide halftime analysis. I'll show you what trade ideas look like in a second. Provide access to an incredible investing trading community. I provide a lot of charting support. And if you're somebody that is maybe new to technical analysis and wants to learn about it, I'm told I've built out an incredibly good technical analysis program. But at the moment, we're doing a bit of a Christmas event, 20% off all of our membership plans. So feel free to go and check that out. Just to kind of show you what our trade ideas look like. This is a recent alert that went out for Lithium Americas. I think I touched on this one in the analysis. Cloudflare, massive 100% plus winner. We've got Square Inc. met our target earlier in the year. Zscaler was a massive winner. Antero Resources was a massive winner. Plug Power, massive winner. And last year, of course, it ripped 400 odd %. So I'm very unique in what I do. On our website, I record every single trade alert that's ever been sent out to our clients and members, and I've done this over the last 4 years. But the purpose of this is to just show everybody the date that the high conviction alert went out, the price that has been recommended, and how that stock has then gone on to perform. Like I said, I've done this over the last 3-4 years. I don't know anybody else that does this and offers the level of transparency, and I think it's very important. So I think if you are somebody that I guess has got the mid-term approach, if you're looking weeks to months out, if maybe you're looking to get away from day trading, maybe you're just too busy with work, life, family, etc. to find the best stocks, and really to keep on top of the market as much as I guess us professionals do. Maybe you'd like to be part of a successful community, or maybe you're just sick of hunting around social media. You might have found a place. Feel free to go and check out the website and all the details. But like I said, very straightforward. Many of our clients and members have been with me now for full 3-4 years, and but just to kind of show you some of the emails that I get. This is obviously just a few days ago. Now, what I would say is this isn't standard. This is, I'm assuming that there's a lot of options activity here. Turned 55k into 650k. I'm one of 3 platforms that Dan subscribes to. Obviously, that's an incredible performance. We've got Sean. Look forward to many more years as a member. Nick, I will be a member for life. Rocco loves the community, the education. Vince has been with me for 3 years now. 2 years in a row, he's over 100%. We've obviously got some accomplished options traders. Jamie, again, just massive account growth in the last couple of years. So feel free to go and check out our website. We're doing obviously a big Christmas event. It's going to be running for 7 days. And for those of you that have been eyeing up my work for a while now, might be an opportunity to get in and yeah, so whatever you're up to, whatever you're doing for Christmas, please do enjoy the time, and let's hope we get that Santa Claus rally. Thank you very much for watching, and maybe I'll welcome you soon. Thanks as always.